Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're also streaming to you live on yorbamedia.com. My guest this segment is Nick Santiago. He is the president and CEO of InTheMoneyStocks.com. This guy has been called by a lot of people who watch the show as really the Louisville Slugger. Thanks for coming on to the show, Nick.
Always great to be back, Michael. Thank you for having me.
Oh, my pleasure. Okay, you wanted to start off talking about, let me see here, FXE.
Yeah, last week I think we were on the show, and you had told me you were even long the FXE, and I had just talked about going up into a pretty important retrace level, just around the 134 level, or just a hairline below it. And anybody listening, just realize we had a pretty good sell-off on the FXE, and we could see some further declines there. I also think that the FXE could be sold short on any sideways bounce here, as long as it doesn't take out the 134 level. Probably could be sold short within the next few days.
Yeah, I was thinking about getting. I got stopped out on yesterday. I had a profit on my euro, is what it was, and I saw it pull back a little bit. I thought, I think there's one little tiny bounce in this going into Friday, so I bought something this morning, and then I'm thinking about getting out tomorrow.
Yeah, I'm just right now. With yesterday's decline there in the euro, that was a pretty significant reversal. But I mean, we could see some sideways action for a couple of days. But any sideways action around this 133 level, I think the euro could be sold down to probably around the 129. I'm not looking for the death sentence in the euro just yet, but I will be. It's not coming yet, but I do think we can get down to that 129 area.
Okay, that's good advice. That's good sound advice. All right, I appreciate that. All right, what else did you want to talk about?
Let's also elaborate a little bit, I guess, on, let me see what I have here on my list, but we could touch on a few different topics. I do think that it's important for traders to talk a little bit about oil, since oil is in the news today.
Okay, now did you want to do crude or USO?
Well, let's go with USO, since everybody can have that, unless you have a futures platform. Most traders, a lot of traders that I teach don't have futures charts, so
okay.
You can just go with the USO.
I'm there.
Yeah, it's making a pretty sizable move now, and I think there are two things going for it. One thing is the dollar remains. The dollar had a nice bounce yesterday, but it remains weak. The only way that you're going to get crude down significantly is really to have the dollar strengthen, and then you have the geopolitical events in Iran and also in the Middle East. I think there's even a fire today in Saudi Arabia. So either way, the oil premium, even if it does pull back, I think it would just be a pullback at best right now. Oil still is holding up very well, but the high price of oil will ultimately affect the stock market, affect the economy if it hasn't already, and there's nothing positive out of high oil.
Okay, so do you see a top here now, or a little further?
No, last week when I was on your show, though, I did give you a level, I believe, of 113.50 for spot crude, and that's where I think traders should still look for that level to get tagged.
Okay, and at 113.50, is that a minor pullback that you're thinking for a continued leg, another leg up, or do you think that's about it?
No, it could just be a pullback. It could just be a pullback. It's going to really depend upon the pattern that is formed after that level is tagged. So I would probably look for resistance there. But if that thing can base, then oil could be, setting up to move even higher. I'm not an oil bull by any stretch, because I think once deflation hits this market, everything is going to come back down to earth, including the S&P 500, oil, copper, gold, silver, you name it, everything is going down together. However, if the pattern is right, you could get another spike in crude.
When you say spike, you're not talking like 140, are you?
Well, not yet. Not yet. I'm not. I'm thinking 113.50 right now,
right.
And then we'll look at the pattern after that. That might be final high right now, 113.50. I couldn't rule that out. But again, I would just have to look at the pattern on the chart, and then I'd alert the subscribers.
All right. Now, the other markets that are affected by crude at that point are going to be, one of which is going to be the stock market, because that's really could be a real drag on a lot of economies the faster it gets to that price level. What's your thoughts on that?
Absolutely. I agree 100%. I concur. Higher crude is not beneficial to the stock market. Last week I alerted your listeners, and as well as my own subscribers, I said, towards Tuesday, watch, I would be out of gold mining stocks, gold stocks, and, everything under the sun for the most part. I'm not at my cycle date yet, but this is where a time where you want to be real conservative in this market. This has had a big rally, but I believe it's the sucker rally of 2012, and the real rally will come in the latter part of the year.
Okay, all right. So let's go back to that. I mean, I remember that you did. You said this is get out right here, and then we had this massive drop yesterday in the gold market.
Right. I think I gave your subscribers even on the GDX, which is the Market Vectors Gold Miners ETF. I said, $58. Run for the hills, sell it all, sell all your mining shares, everything.
You did. Yeah, you were emphatic about it. There was no, there was no encryption in your message. All right, let's go back over the stock market thing, because you had my mind was going back on the gold. You're looking at a short-term top now with another leg up, or what are you saying to us?
No, I think from here on in we're going to make lower highs going forward.
Okay.
I could probably go into hibernation now and see you in the latter part of the year and say get bullish, but I'm not bullish any longer on this market at all.
Oh, okay. So when you say lower highs, are you expecting this thing to kind of like grind lower, or some major event to give us a real good crash?
Yeah, well, I never know what the catalyst is going to be, and always anytime we've had a rally now since October for the most part, with a couple of major pullbacks, and then the rally since December 19th turning point has, been somewhat on the terrific side for price levels, for price elevation and inflation. But the truth of the matter is, it was built on stilts. So when you get this, you're still gonna get traders to come in, and they're gonna buy the dips for a while until they get tired of that. And once that happens, then you'll get the hard selling. So in the beginning, you'll just get maybe some mild pullbacks. But later on, the harder selling will come in.
Okay. All right. So we're going to start positioning ourselves for the next leg down of how we're going to trade that, is what I'm hearing.
Exactly.
Okay. All right. And in doing so, do you have any favorite ETFs you were going to be using? Because that's really mainly where you like to trade, right?
It is.
Okay.
It is. When I'm an index trader, so I like the SDS. I like the even the QIDs. Anything, the BOM, you name it, anything that's short copper, base metals, anything that's short the overall indexes, it's fine. How much risk you want to take on those double, triple, or single ETFs is up to each individual. But, I just give you when I think the market's going to turn. And, I don't think the big turn is here yet, but, we're now in the zone.
Okay. All right. Further downside on gold and silver, is that what you're thinking?
Yes. Further downside on gold and silver. If you're looking at, want to go with gold futures first? We'll go with gold futures.
Either way.
Yeah, I did some work on them last night, but right now, just give me a second here. I'm looking at this probably trading down.
I think you said like 1,300 at one point.
Well, I think I said 14.
1,400. Yeah.
14, but you're going to have to look at about 1,550 right now, and in the short-term scheme of things. I think that's realistic, and gold will still get some bounces along the way, even at around the 1630 level. You'll get a bounce.
We got a little rally today, and $12 rally. Are you looking at this as or maybe a little bit more before you start shorting it?
No, I would. Generally after you get this hard sell, and this was something that a lot of my chat members asked me today. When you get the hard sell in gold, silver, like we did yesterday, big sell-off, generally what will happen is you'll bounce for a few days. It's typical to get a little small retrace. It turns out to be a selling opportunity, to be honest. And you're talking to a gold bug. I mean, I own bullion, gold bullion, silver bullion, coins. I mean, I'm looking for the latter part of the year to make a substantial investment in both again for an up move. But right now, I do think that gold, silver go lower.
Okay, so maybe sometime early next week?
Yeah, sometime early next week, or if the pattern forms sooner, that could be a time too. But you just got to really just look at the pattern on the charts now. But you get that bearish setup, it's going down lower.
What you got to do is get in the trading room with you so they can see you pull the trigger for real.
That's it. Come on in. I posted gold levels last night for all the members, and I had all my traders as of Tuesday, out of all their gold positions.
Okay, that was sound advice. All right, now the silver.
Yeah, silver, same thing. I don't know if I gave you the level last week, even on SLV at 36, but I had given it to my subscribers. The 36 was the upside objective. I actually thought gold could go a little bit higher to 177 on the GLD, but it didn't do it. Silver, same exact setup. You got a nice little bounce today. Let it go sideways, and then silver probably trades down to around $30 in the near term. Ultimately, 25 will be a very, very important level if it gets down there, and we'll have to see what time of the year it is when it gets down there.
Okay, but you're calling tops on these things and getting ready for everybody to get a short position for, it sounds to me like a trade that could last for about 2 or 3 months.
Yeah, well, I mean, with gold, I pretty much called the top when it actually took place in 2011, and I just told traders even in the late part of December, I was even on your show, said gold puts in a short-term low here, but it's only just what we call an ABC or a zigzag up pattern, and then we'll start to head down again.
Okay. Last but certainly not least, the U.S. dollar. Are you looking for a rally on this thing to continue for any period of time?
Yes,
okay.
I am looking for the dollar to rally up. It staged a nice reversal day yesterday. That was a pretty powerful day on the dollar. If it takes out the lows, I'll have to readjust. I'll be wrong, but you got a nice reversal day on the dollar. I do think the dollar's headed back up to around 80.50 on the U.S. dollar index futures, and then potentially 82 and maybe even higher in 2012. But longer term forecast, I think the dollar gets annihilated. But that's down the road.
Okay, got it.
Months down the road.
Months down the road before the annihilation of the dollar. In the meantime, a rally that could take us, into June-ish?
I got to reserve those dates, Michael. I'm still working on them, and I don't want to forecast out too far because, I know what I'm having for dinner tonight, but I don't know what I'm having for dinner, in the summer.
All right, Nick, thanks so much. I'll let everybody know how to reach you.
Thank you very much, Michael. Have a great day.
You too. Everybody, that was Nick Santiago, President and CEO of InTheMoneyStocks.com. That's InTheMoneyStocks.com. Go there. Get a 7-day free trial of what this guy does in real life, real time, real money in that trading room.